Even with rate cut probabilities unknown, gold and silver are maintaining significant price strength. Over the last 3 months, gold rose 15%, while silver increased 35%. Analysts believe gold and silver could rise further due to a possible commodities uptrend. Commodities tend to rise with two different scenarios: improving business conditions and heightened geopolitical tensions. Before we begin, remember to like this video and subscribe for more economic updates. Analysts at UBS recently suggested the prospects of both ongoing heightened geopolitical tension and an improvement in the global economy could mean more support for commodities and precious metals in particular. We have held the view that commodities such as oil and gold remain potentially helpful geopolitical hedges, UBS analysts said recently, adding, "We retain a positive outlook for the asset class based on fundamentals as well. Overall likely lower U.S. interest rates this year and a modest restocking cycle bode well for a more sustained upturn in global industrial activity." There are analysts at Goldman Sachs who see commodities thriving on the strength of improving economic conditions, with metals benefiting directly. We find that U.S. rate cuts in non-recessionary environments lead to higher commodity prices, with the biggest boost to metals. Importantly, the positive impact on prices tends to increase with time, as the growth impulse from looser financial conditions filters through. As a precious metal that also happens to be one of the best conductors of electricity, silver is unique in that it has the potential to strengthen not only as a store of value, but also on the basis of significant industrial demand. Australian bank ANZ expects silver to rise due to geopolitical tensions, improved economic conditions, and chronic supply deficits. An upturn in the electronic cycle and potential demand growth from the solar sector bodes well for silver's industrial consumption. ANZ senior commodity strategist Daniel Hines said, adding, "Multi-year low stocks along with negative market balance warrant higher silver prices." Several analysts at UBS also are excited about silver's prospects, projecting it could rise another 23% over the next 12 months. Some industry observers are going as far as to forecast a commodities supercycle. The demand coming out of the global health crisis, supply chain disruptions, and geopolitical issues are all driving this supercycle, said Bill Baruch of Blue Line Futures, who cited recent price gains in both precious and base metals, as well as cocoa and coffee, as proof. Even though there are some strategists that aren't predicting a supercycle, the optimism for commodities and their performance doesn't require a supercycle. For example, analysts at HSBC recently said their statistical model indicates commodity prices now may be poised to make a significant shift from what they term a weak bull phase to a super bull phase. Gold and silver continue to shine amidst geopolitical and economic trends. The excitement among analysts suggests we may be on the cusp of a major commodities uptrend. We'll keep a watchful eye on this story. Until next time.